Welcome. TradePhantoms.com. Hopefully everybody's doing well. Some volatile times right now. Today's date is Tuesday, the 4th of March, 2025. And I'm going to go through some pre-market prep for about, give or take, an hour, give or take, here at TradePhantoms.com. Mr. Blue, so let's dive right in without further ado. Noteworthy, just in regards to news that is on the dock, potentially for today, being Tuesday the 4th. It's pretty quiet, just in terms of planned economic news. In the U.S., there's really not much here. Tonight, we do have the president of the U.S., Trump, speaking. Okay, so that's important just for tonight. Markets will be closed. Futures will be open, right? Forex will be open. But he is talking. He is talking tonight. So that's something to be noteworthy of. Of course, the tariff talks continue to take effect, and the main source of news right now, and also the Fed. The Fed now. I will mention things that are changing. The Fed Market Watch tool, the Fed or Fed futures traders, I should say, are starting to plan a probability for an additional rate cut due to this market dropping. Well, not due to the market dropping, but due to everything that's going around. So that's something that we'll definitely want to keep an eye on. Next meeting is the 19th of March. It's too early to talk a little bit about that right now, but it's definitely something that is on the light that's changed from, I would even say, a couple of weeks ago, maybe a month ago, maybe a couple of weeks ago, okay, to this tariff talk. So we'll talk more about that as we get kind of closer to that. Of course, I'm going to get to the charts in a moment. Wednesday, we have a ADP non-farm payroll. On Friday, just make a note, we do have the FOMC. Not FOMC, FOMC Fed Chair is speaking on Friday, yes, indeed. But we have non-farm payrolls is what I was hoping to mention there. Okay, so tonight is going to be pretty interesting. Now, I will say a lot of folks right now are, even on Bloomberg, things like that, are mentioning this thing, the Trump put. So people are going to try to get short. So I want to be careful with that, as always. So, when the public is leaned towards one side, you kind of go the other with it. So it's always going to map out some levels here. So I will start with futures, okay? But then what I wanted to just due to the markets dropping down into, I have SPY here, just kind of moving around here on a weekly time frame. Kind of what I wanted to do is map out, I kind of organized this here. Hopefully y'all can see it a little bit more better. Matter of fact, before I get into it, let me bring this up here. Give me a moment. Here's a document here that I usually bring up every single day. I'm going to get to the charts in a moment here. But just to give some new folks the lay of the land, or the color code, if you will, if y'all can kind of see this. Yeah, good job, Mark. Gold came down into a beautiful level on the higher time frames, long gold. Gold's on fire right now. So monthly top-down approach, demand supply, right? Backdrop, institutional demand, institutional supply is the backdrop. Top-down multiple time frame analysis, right? Orange, yellow, blue is the color code. Orange is monthly time frames. Okay, yellow is weekly. Blue is daily time frame association. Okay, so when you see the colors on the charts, those are the time frames associated with it. Candlesticks, bullish location, important, bearish. Okay, great. And then liquidity map. This is something that's extremely important that we talk about throughout the course of everything that we do with Phantoms here. Okay, so that said, that said, I wanted to spend a little time here today, just even on YouTube, to kind of go over some higher time frame levels as well. So we've been discussing this for I'd say over the maybe week and a half, give or take, with this market drop. Okay, as we all know right by now, right? Even though this talk, tariffs, and all this kind of stuff, which is important. Don't get me wrong. I'm not downplaying that. However, just be careful. Fears starting to kick into the market, things like that, and that typically will bring markets down into levels of higher time frame demand levels. As you can see, we have orange down here. All right, and then that could typically be used as a potential buying opportunity. Okay, so a little bit early on that right now, but speaking right now on Tuesday, the 4th of 2025, March 4th, 2025, pre-market quote on SPYs is 578.86. The reason why I say that is if I pin the all-time high that just got put in a couple 3 weeks ago, okay, and we're off of that right now, we're only down about 5.4%. Okay, now of course we're not done yet. Okay, we're in one of our sessions here that we have, and we have last month January's low coming in here. Okay, we have January's low coming in here, so you might want to map that out. Okay, and this is also going to be associated with futures as well. Okay, so of course we already broke last month's low, because if you notice on this little checklist here that I put together for the team, you want to map out last month's high, last month's low, and then map out relevant highs and lows on the monthly time frame. Okay, so we have January's low right here, which comes in at about 575.35. So that's something that is something that you might want to really look at. Okay, and if we do break lower on that, we have November's low. This is SPY. November's low 567.89. October's low 565.27. Okay, so this is going to be this would be a nice little area here that we haven't really got down to in quite some time, where the markets would be down, give or take, about anywhere between 7 to maybe 8% on the S&Ps. Okay, and I do want to make a note of this as well. If we do continue to flush out, we're only how much percent off of that right now? Only another 2.5%, give or take. Okay, now just because we're gapping down, I'm going to get to the gaps in a moment. Just because we're gapping down does not mean that we're going to continue to come down. These levels, there's levels down in here, right? The better ones are going to be down here. One of the things that I wanted to make a note of, just publicly as well, is I would not be surprised if they swipe it right below what's called this shelf area here. If I look at the monthly time frame, if you can kind of make that out, I'll try to zoom in best as I can here. This is SPY SPY ETF on the S&P 500. All right, and what's important here is the key takeaway. That okay, the next monthly low is not until September low, which is all the way down here, S&P 540 handle on the S&P on the SPYs. Okay, now that's last year's VWAP. That would be a last year rebalance. However, getting back up to here below the October low, below this October low, what I'm sifting for is what's called a potential liquidity sweep. Okay. All right. That's supposed to be an I to spell liquidity. All right. It could be a potential liquidity sweep right below here. I'm looking at that below the October low. Why that is so specific with the October low is because if I look down and left below here, the next monthly low isn't until September, which is all the way down here. So there's a bit what's called a shelf, and there could be a liquidity grab right here. We're only about 2% off of that. Okay. Now we have a couple of things that we're going to be passing potentially in order to get down into that area here. Okay. But basically, long story short, you can write these numbers down. Okay. 570 SPY, 570 down into I would say the 564.50. Okay, 570 into the 564.50. 564.50 SPYs is what I'm looking at for a potential liquidity sweep. Okay, get more people fearful, get more people selling short, or selling at the wrong time. Okay, and down into a decent little liquidity sweep level right there. Okay, so that's something that I wanted to make sure that I wanted to put on the radar in the dock here. Okay, but as always, we have this level here. We'll get there. We'll cross that bridge when we get there, as always. But we also have that January low right down there as well. So just map out your monthly highs and lows. Specifically here, we're coming down. So map out your lows for the month. There's only a couple of them that are coming on the dock here for the next maybe week or two as we begin the new month of March. Okay. And in QQQs, or I should say SPX, I should say, that comes in, hopefully y'all can see these. Might not be able to see the colors. I know it's a little blurry here, which is annoying. I gotta start streaming on OBS. It's so annoying, but I get it. But January low 57.72, and then we have 57.03 November low. There's of course that October low down here 56.74. All right, so if you go to your monthly time frame, map out those monthly lows, you'll get a better picture of that. You can see there's really nothing here under here, so could be a bit of a liquidity sweep on the monthly levels. I've been through this multiple times in my career. Okay, this market's only about not too far off the highs. Okay, we're coming down into some levels of demand, so I'm looking at some monthlies down in here. All right, let me just make a note here too, liquidity sweep. All right, just giving y'all some levels to insight for the, now we're gonna go to the futures market and of course drill down on the small time frames. On QQQs, is what you see here, NASDAQ ETF. All right, the October low comes in about 477. So we get that November and October low down in here. Okay, and this forms I'm on a weekly time frame here, but this forms a pretty decent, switching over to the monthly, pretty decent impulse. We have a bit of a basing here on the monthly, then we have an impulse here. So that broke out into that new, the new high. That was kind of the last pump that we had. That was pretty dramatic, if you will, from last year. Okay, kind of like the election rally, if you will. Okay, so that comes down. That comes, QQQs 484 down to 477, give or take. Okay, so map out those monthly levels if you can see that impulse, basing, impulse right in there. Okay. Okay, let me start this off a bit here with futures. That was the SPX, which is the cash index, and then just did the QQQs. Going over to futures here, starting off with the major four indexes. Okay, we got the S&P on the upper left, NASDAQ upper right, Dow Jones lower left, Russell 2000 bottom right. I know there's a lot of lines here. That's why I started off with SPYs and Qs. It's a little bit more cleaner. I kept to work on these charts here. Here's a daily time frame of the S&P futures. Daily time frame S&P futures. As you can see, okay, we are floating down about what, 0.5%, give or take, right now, pre-market. Okay, before the regular market opens. Okay. Long story short with this market's, continuing to drop. Right? We have some nice volatility. I mean, we're getting about over 100-point swing moves in the S&P and SPX. Okay, so volatility is here. Okay, now if you can kind of make out to see what this candle is doing here, we open here. We're coming down, and we are coming down into a level of weekly demand. Okay, into a level of weekly demand, albeit, however. As mentioned into the with the SPY, just because it's a bit more cleaner, here's what I would suggest and recommend. Go down into the January 13th, date January 13th, okay, day, okay, I switched to the daily time frame on SPY. Go to the January 13th low, and even in futures, map out that level below there, because this is going to be a potential liquidity sweep here, potentially just for today. Okay, so that comes in about 575.35 in the SPY. I'll make a note of that here. Just copy and paste to save some time. All right, and then in futures, matter of fact, when I get to the smaller time frames, I'll drill down into that time frame. Okay, to give you the price. Okay. Now, if you can kind of make what this out is here, we do have a couple of levels here. Okay, 58.25. We have 58.06, 57.90. Okay. However, if we do continue to get lower down here, I want to map out that level that I want to connect from SPYs and connect it into the S&P futures. One thing I will, as a notation to take away here right now, we do have this 200 period moving average. I'm not sure if you can see that. I'll make that a little bit more aggressive so y'all can see that there. Hopefully that pops up a little bit better there for y'all. Okay, that's the 200 period moving average on a daily time frame. Daily 200 period moving average comes in at about 57.38. Okay, that's a nice little hit point for markets when they hit that. But as always, I want to see what that lines up into in terms of a level. I need a level of demand to confluence with that level. All right, so I will get to that in a moment. Okay, Nasdaq, it's been a bit more weaker. All right. And as you can see, this the drop continues, right? Nice red bars, red bars, red bars. One inside day here, another little inside day, a little bit of a wick right there, and we drop down. We're continuing. However, I will say I mapped this level out in orange. If y'all can make that out, at the bottom right here, 20,250 in orange, because we had a monthly level of demand below price on the Nasdaq. Okay, that's also where the 200 daily period moving average is as well, associated there, down there, or confluence there in addition to. Okay, so even though there's bad news across the board and coming across the news stations and radio stations and TV stations, okay, we are coming down into some pretty unique levels. And in a moment when we go through FANG, you'll see that as well. Okay, so just stay disciplined, right? So what I'm going to do here is drop or go over into the monthly, the weekly, the daily. So get the monthly on the left, weekly here in the middle, daily on the right. $60-minute upper left, 30-minute bottom left, 5-minute here in the middle, and then the 2-minute on the right. Tesla MSTR. Let me see, Tesla. When you got big moves like this, go to the higher time frames. Go to the monthly and the weekly to look at the bigger picture. Bigger picture on Tesla. I kind of nailed a level in Tesla on a liquidity sweep at 274. Missed the trade, missed it. Myself personally. Okay, we're gapping down right now into that level again. It was just a classic liquidity sweep. But long story short with this, if I'm looking at the monthly time frame, all right, down here, lower, right now pre-market quote in Tesla 273.80, which is right here. Okay, down here, there's a better level here. All right, there's a better level down in here. So call it about 250 to 250, 225, pretty simply put, down in here. Okay. Pretty simply put, from 250 to 225. This is going to be a nice little area here on monthly demand. That's going to be pretty interesting here. Right now, we're about 25 points away from that. Okay, pre-market quote wise. All right, because this is the retest level. We already hit it and we bounced off of it. Okay, some phantoms took that. All right, from 274, and then went up to like $300. Okay, we had a gap up yesterday. Then we just faded down. The market's gapped up, and then just continued to fade down for the rest of the day with a sell-off yesterday for the final hour. So Tesla's looking good down here. Okay, momentum is still down on this right now. Yesterday's high, yesterday's low. All right, so the sell-off in Tesla's one of the weaker ones too in regards to sector rotation and all that good stuff. Okay, there is an unfilled gap here about 250.50. So that's something that might be that you want to have potentially on your radar as well. Okay, MSTR is down at some interesting levels. Bitcoin is of course dropping down, as we probably already know, which is good. Don't get me wrong. Okay, because I want to accumulate more. Bitcoin's kind of the proxy for risk. So Bitcoin down is risk kind of off, if you will. Okay, Bitcoin's a proxy for appetite of risk, and of course, it's been floating down, right? So this is going to be good though, because if you wanted to buy Bitcoin, you want it to come down. You don't want to be buying high on Bitcoin, right? So, however, we do have some levels here from last year's October's high and so on and so forth. That comes down here. I got some hit points here. Pretty simply put, 70K, 65K. Got a nice little level down in here, about 60K, give or take as well. Right now we're trading about 83. Okay, as you can see, we had this long base. We're dropping back down. So this is going to be good to potentially pick up some here down this level. So MSTR is going to be MSTR is going to be a stock. Yes, as a Bitcoin play. Okay, it's a Bitcoin proxy as well. Okay, so again, yeah, just lower. Okay, just if you got to be patient. Okay, that's the thing with these markets is you got to be patient for higher time frame levels to hit on the monthlies. Okay, the monthlies and the weeklies. So again, we have some massive monthly levels of demand down in here on ticker MSTR as well. So just go to your monthly time frames, folks, right? And that's the thing is people will get impatient and say, "Oh, we think we're going to get down there." Okay, if we expect a little bit more of a down move continuation on these overall markets, and Bitcoin can come lower down into maybe the 75, 65 handle, give or take, that would potentially take MSTR down into this 200 to I'd say 150 to 200 handle down in here. Okay, as you can see, there's a couple of notes here: sold put, sold put, sold put. Okay, so these are times where on down moves, okay, we get a nice down move on Bitcoin, nice down move on MSTR. Premiums are really high right now on these puts, so you can sell some puts willing to own the stock down in here. It's called the whale strategy. Okay, so this is a really good time to start to do that right now. As you can see, these are notes from before where we were collecting some premium, and that was when MSTR was like up here. Now MSTR is in the 300 handles. Right now we're in the 240, 250 handles. So therefore we might be able to get some good premium here for like maybe the 140, the 145. Okay, but you got to know what you're doing there in terms of selling puts. Okay, you got to be trained up on that and make sure you know what you're doing there. Okay, for those that know, great. TSM Semiconductor taking a little bit of a hit right now. But in terms of monthly levels, get some monthly lows down in here. So you want to check that out. We got a weekly area down in here. But check out the SOXX, the SOX, SOXX. That's also the, this is a weekly area here. I mean, just doing it pretty quickly here, like 161. Thanks, but you didn't understand it though. Well, we have classes for that. If you sell put, but I went over it for you there, buddy. All right. All right. So Globex Trap ES. S&P futures map out Globex low. Right there, represented by that blue line. Globex high. Represented by that blue line right there. All right, now we are on a new low, so just be careful with this, okay? Exit distribution here. All right, a little bit of rally up. This white dash line is VWAP. All right, I'll keep it short and sweet for right now. These levels here got tagged, we bounced. We finally broke it. Okay, we came down to this weekly 58, 55, came down to this weekly area right here. Okay, that was Friday, right? Friday. And then I actually trapped myself. I was pressing SPX. Pressing SPX. Did not take a Globex trap long. All right, and I actually pressed down here. So I Globex trap myself down in here. And so we rallied back up, great. Okay, and then yesterday being Monday, okay, we dropped right back down. Okay, just gave up all of Friday's kind of late day push. Okay, a lot of that was funds that I had to buy at the end of the month to close the books. So that basically got faded yesterday being on Friday. Okay, we had one of the biggest moves at the end of we're having some big late day moves in SPX, so it's been great. I was pressing with the team on Friday, but I almost wish on Monday y'all were with me because I was doing the same thing, almost the same thing. I was pressing. I wasn't pressing because I was in a session with the folks, but took some SPX options and they exploded. So hopefully y'all did well on that. I read a session yesterday, but that was yesterday. Here's today. If we break Globex high, okay, if we break Globex high, so I have a level of supply above the Globex high. This is the Globex high here. I'm just going to delete this line just to make it a little bit more cleaner here. All right, Globex high, we have supply right here. So it has a drop, a basing, and a drop right here. 60-minute time frame of the S&P futures, what you're looking at right now. All right, so that comes in at about, call it 49.47-ish, give or take. All right, we have another couple levels up here as well. All right, I'll just pin to keep it simple. The 6,000 handle here. 1 hour time frame S&P futures is what you're looking at. There's something called a G-trap short. All right, levels on levels, so we have some supply up here. Okay. Let me get the other as promised here. Let me see this. Let me bring this over here. Open this up. Add some time here. How do I get it all the way back? So most that I can get on it. I wanted to get the January low for you folks. There's so many lines here. 58.09. Wait. Yeah, 58.09. We already passed that on the low. Okay. Yeah, so really we got the 57.38. So 57.38 would be the area. So make sure you're tracking SPYs, SPYs today. All right, but if you can get the level down lower from the SPY handle that I gave, confluence that with the futures. All right, NASDAQ. One hour time frame here, NASDAQ. NASDAQ's starting to touch some monthlies down in here in futures already, okay? So Qs just were a little more cleaner just because there was not as many notes everywhere, right? So I get it. 1 hour time frame here, NASDAQ, we got that orange level down in there monthly, right? 20,250, 20,250, that's about the Globex low, give or take. All right, we got Globex high here. All right. Level of supply above Globex high. Okay, we still have this level here that was used yesterday, so we can still pin that 21,050. Okay, 21,050 was used for bounce demand. Bounce demand, we were talking about that. Finally, we broke through it. Basing drop, retested it yesterday. Okay, we dropped, so we can still potentially use that as a Globex trap here potentially today. And then also I have the 21,392 up here in addition to that. Okay, so I'm going to be mapping out the Qs off the open regarding the NASDAQ. Okay, gold futures, monthly, weekly, daily up, pulled back beautifully. Okay, beautifully into some higher time frames. Okay, I had this level. Let me just drop down monthly, weekly, daily up on this. Let me just drop down to the 60, get straight to the point. Y'all can probably see that a bit more better here, right? So I had this level, this massive level here mapped out with the confluence with the daily rising 20 period moving average. We dipped down. Okay, we actually came down into these levels here. Okay, and you know, we're rallying back up. Okay, so gold, hey, here's gold futures, 60-minute time frame. We, you know, took bounces, had to come down into the lower, you know, daily. We have a daily level of demand down here, highlighted in blue with the rising 20-period moving average. What I was hoping for is the weekly down in here. Okay, if I make this like yellow to just represent weekly, if y'all can see that, that almost hit 28.30 right here. The low right now in gold futures within this pivot point right here is 28.45, which was the level of demand right below that daily level right there with the rising 20-period moving average on the daily in blue. Okay, so it'll be interesting to see if we could potentially. I'm not sure if we're going to take this pivot out. Okay, gold's rallying up right now. We're in a higher high sequence. Okay, so pullback potential imminent is what you're getting right now. But gold is bullish alignment to the upside here. Back alignment to the upside. So gold's going to be one that is definitely on the radar for bullishness in the event that these demand levels continue to hold. Okay, so these are all kind of like old levels here, but we can even just keep them on just real quick because we actually have Globex low level of demand below here. You can potentially even still use these levels here. There's a level of demand right in there, comes in at about 28, call it 85. Okay, 28.85, right below the Globex low. Almost touched it overnight here today, right? But didn't. But you can definitely reference that 28.85. Okay, and then we get the 28.64. Okay, the GLD puts, just still holding those for right now. The gap for yesterday wasn't for bearishness. These are something that is a hard trade to do. All right, but I'm gonna see how this market reacts off of the off this gold push up here today. Okay, I was kind of sticking my neck out a little bit. This is one that we probably should not be battling in terms of relative strength. It's one of the strongest things in financial markets right now. Okay, so tomorrow's Wednesday. I'll talk a little bit more about that. But the first entry that I got in and just got out of them, and then I'm still in like two more scales on it right now, and they're like hovering. They were like small loss at like break even, a little bit of gain, then they're back. They're back down to small loss there. They're expiring in June, but that trade is not that good of a trade because it's a counter trend mean reversion, and we already got our mean reversion. I'm not sure if anybody got out of anything right there. I personally didn't, but I'm holding on to those. We do have a little bit of a gap. I'll talk a little bit more about that tomorrow as well when we spend a lot more time together. I know Eric A is a Phantom member. All right. Let me see. So I'll go to the VIX, super important. Just map out yesterday's high, yesterday's low. Right now, VIX is up about 5.8%, give or take. Okay, VIX up, market down. VIX down, market up, inverse correlation. All right, also map this out on the overnight high, overnight low as with the others and everything else, represented by these white lines here, if you will. If the VIX continues to remain high and trend higher, that could be made more bearish for the market. Just kind of pin where it is in the middle right now, and then if the VIX, slices down and goes down, breaks overnight low and continues and sustains lower, and maybe potentially even trends lower. Okay, that could be a bit more up or bullish for the market, or just a fade, if you will. SPYs, pre-market quote. Kind of already talked a little bit about this. Started off the session here with this. All right, and so pre-market quote. Yesterday was a day, right? Yesterday was a day. Completely took out Friday's little late day rally. Okay, close here, gap down here. We're gapping down into at or around yesterday's low, as I had y'all already kind of map out your January low right down in here. We have the November and the October low in here. Could be a potential liquidity sweep down here if we gap down and continue down to continue to potentially flush. Okay, I'd be actually looking to get long potentially as the liquidity sweep potentially down in here. Okay, so we do have some levels of demand down in here, as mentioned, right? That green line right there is what's called a handoff VWAP. Okay, from the Japan interest rate change. Okay, and that's been respecting and holding beautifully since then. Okay, we get that darker black line here too as well. That's yearly, last year's VWAP. Okay, so that's last year's VWAP. So again, I kind of mapped out these levels like C, B, A. The best one is going to be A, of course. Okay. Uh, yeah, Harrison, oh, handoff VWAP on YouTube. Yes, sir. Yes, sir. We have to be politically correct on YouTube for free online. Don't want to get canceled by the algorithm police. The algorithm police is after us all the time online. So A, B, C. All right. I mapped out this level is still good, but I gave it a C score, if you will. B lower down here, kind of a bigger liquidity sweep as mentioned, and then we get A plus level down in here for last year's kind of VWAP yearly. Not yearly. It would be kind of used to this year as a yearly rebalance. Okay, but we're up here, right? We got 1, 2, 3. We got several levels to break to potentially get all the way down there for now, right? But right on the dock here today, we got this 575, 576 handle and the SPY that needs to be dealt with potentially today, if not this week, okay? QQQs, same thing, kind of mapped out some levels, A, B, so on and so forth. All right, this could potentially be the C here in terms of grade school scores, test scores. All right, again, monthly lows. All right, make a note here, November, December low, if y'all can make that out. Okay, got a nice little level down here, Q's 484 handle. Okay, 484 handle. So right now, gap down. Q's actually broke this pivotal level that the S&P 500 did not. So Q's, NASDAQ a little bit more weaker, tech's a little bit more weaker. Okay, right now it's one of the weaker sectors, henceforth why it's kind of making this market drop even further because tech is a very high weighted sector in the overall markets. Okay, so again, monthly levels, go to those higher time frames. Okay, dollar index dropping, dollar down. All right, picked up some long GBP USD and some long Euro USD, by the way. Apple, all-time high here, monthly level here that got tagged in the month of January. We're in the middle. So be careful with Apple. Amazon, a bit more weaker. Now Amazon, I'm going to go to the higher time frames here. All right, and what's unique about this drop here is yes, FANG, the Magnificent Seven, if you will. It's dropping. Okay, yes, and that's again fueling this market drop as well. Magnificent Seven is very powerful. However, look at the higher time frames, folks. Right, look at the higher time frames. So we're coming into, on a lot of these FANG stocks, the Magnificent Seven, we're coming into some massive monthly, weekly levels. Okay, so here's a weekly level down in here on Amazon. All right, and I will say, like I said, a lot of people right now are like, oh, President Trump is speaking tonight. Let's get some Trump puts. So the retail public right now is like, trying to like short. So just be careful right now. Don't trap yourself. Okay, look at the higher time frames, and when you're coming into some higher time frames. When you get the public doing one thing, usually the public is typically, as a whole, as a crowd, wrong. Okay, so yes, we are gapping down, moving down. We're moving down. Red bar closed yesterday. We're gapping down. There's some novice gaps. These are what's called novice gaps coming into some weekly levels. Okay, so I wouldn't be surprised if going into tonight's quote unquote Trump talk, people trying to load up on some shorts, and then tomorrow morning, we fade higher. Okay, and screw all those people that are trying to chase price down into some higher time frame levels of demand. Okay, all right, and we don't play politics at Phantoms, right? We keep politics out of it. Okay, but yeah, that's one thing that's on the radar here for today because everybody is talking about that right now. Okay, markets open. Microsoft is coming down to an interesting level here as well. The gap was more fierce earlier, but this Microsoft handle 373 is pretty decent here. All right, but let me just get some internals opened up real quick. Gap down. Advanced decline is negative 13. Vol D negative 3.9 very early. VIX chilling for now. So we got Tesla gapping down into that level again that I had, the 374-ish. All right, Visa. Visa is in a very strong stock and a strong sector, the XLF. Visa might not be a bad pickup down in here at this demand level 358, give or take, on Visa for bullish exposure. All right, we are on lows. TSM slight pro gap up. SPY's actually the folks that were in my session yesterday, all those everything that we got in is profitable. If you wanted to take some profit off of it, XLE we got in. I got a drop down on XLE. You can even take some profit on that. All right, I got in the 83 strike put for June. Bottom for 289. They're going for 325 if you wanted to take some profit off those. All right, just got 325 for some of those. All right. XLP kind of flat. XLY discretionary, the add on that looking good. XLY. All right, we bought these yesterday for the 195 strike put for June 20th for 490. They're going for 542 right now. We can take some profit on that. Well, 515 they're going for basically. All right, but I got 545. The spread's a little weird on these. All right, just took some profit on the XLY and the XLE. All right, if you wanted to take some off. All right, we did a sector rotation session, weekly prep for the first time yesterday. It didn't go as great as what I thought, but well, it was the first one, so we'll iron it out. And the markets were ripping right when we were doing it, so I was focused on some day trading too. All right. So we had got into some puts on the XLE yesterday, and we had a nice little gap down move here, and then we got XLY puts as well, gap down. So TP, that was second entry there, and we got long calls XLY. Sorry, XLP, which is a relative strength play. You can see that's like the only one of the only sectors that are up. Is VIX above the overnight highs? Does that make it a bad idea to try to pick off some G-trap longs? Let me see. Is VIX above overnight highs? Is it? It is a little bit there. For right now, we have we just did a little baby Globex trap long, but the VIX is poked above its overnight high. We're fading that right now, so you wouldn't want it to sustain above there. That could just be a little bit of a poke for right now. All right, but if we get some closes above that, that could be yeah, a red flag. All right, bit of a novice gap down this morning. Q's almost gap filled. Actually, Q's are a bit more stronger than Q's are a bit more stronger than S&Ps right now. All right, so move down, gap down. So took a little bit of profit on some short exposure there on the ETFs. And Q's already took out its gap filling right now. All right, so because of the location and the last month's low and the 200 here, I guess we could just be a little bit patient on this. I'm not getting sure I'm out of there. Bit of a novice gap down. Google's at a really interesting level. On the high time frames. Cumulative tick still down. VIX off those highs. work here, man. All right, so check this out. I'm gonna condition an order. I'm gonna condition an order on SPX. It's low. 73.31. All right. I'm going to condition an order to buy a long call for the day for a day trade in SPX 0DTE for a liquidity sweep below this January low right here to trap some people. Okay. AMT. I got some some bullishness on this AMT, American Tower. Oh, not bad. Not bad on that. If the options are liquid, it's setting up some tape here. All right, so check this out. Yesterday's close was what, 58.50. All right, so I'm going to condition an order that if we get to 57.71 SPX, right below this January low for a liquidity sweep, I'm going to pick up the 58.50. Sorry, yeah, the 58.50 call. So pending limit order. All right, 57.71 condition. All right, long call. Specifically, I'm going to look at the 58.50, which is a gap fill. All right, so you can get some get some trapping going on here. Come on, Gag Spot, you working today? Today's. I'm gonna trap them. See if you can get it. So let me see what this looks like in terms of pricing and risk to reward, etc. So SPX here, March 4th, and the 58.50 right now is going for $9, but I'm not getting it right now. I'm going to condition this to if the SPX, I'm going to put two prices here on the price list. So we add another one here. The first price, this is going to be the 58.50, kind of just like target area. All right, even though we don't have to take it all the way up there to be profitable, but let me just see. So the more important one here is going to be the 57, what did I say, 71, which is about 2 points SPX below January's low. Now, what you want to focus on, if y'all can kind of see it, hopefully y'all can, if you got your glasses on here. I know it's kind of ghetto stream here through the phone. It's annoying. I got to change that. But this is going for about $10 right now. I'm not going to buy it for 10. If we get down into the 51.71, there's a parenthesis number here, and it's about 460, 470, give or take. It's moving. Markets are moving, right? 480, right? So I'm going to round up to about 500 because of theta decay as well, right? So it's going for about $10 right now, 1040, give or take. And so it'll probably be about $500 to $600 cheaper. So this might be priced at about 490, give or take. About, I'd say about 450 to about maybe 420, give or take on the time, if it gets down here. So in other words, what I'm trying to do here is price out what this 58.50 strike call would be in the event that we get down into this level here, okay, which is below the January low. Okay, there's a pending limit order here. All right, so if you pick up these 58.50s, they're going to be about, depending on what time, even if it hits, depending on what time it hits, you're probably looking at maybe anywhere between $4 or $5, okay, per option contract. All right. So long call, if SPX buy long call, if SPX hits 57.71, which is a swipe. And it's a long day, folks. So yep, Q's are flirting with that. Looks like they're, yep, by like maybe a penny, give or take. Yep, yes, sir. So they're filling some stuff down in here. Election gap. All right, got a note there, unfilled gap. Yep, 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 yep. All right, so what I could do here is just think or swim. If I right click, create duplicate order, okay, right click, create duplicate order, because I'm on the analyzer, just analyze some risks to reward. And it brings up this into the order tab here. So then I'm going to hover over to the right here, there's a little settings gear here. And I open that up and it pops open or should here, let's go. There we are. Pops open the order rules, right? So this is one, I'm just using one contract as an example here. Okay, I'm gonna put multiple contracts in my personal account here. But so buy SPX, March 4th expiration 58.50 strike call. Okay, right now it's at 9, but we're not doing it right now. We're gonna buy this. All right, you can hit it at market. You can do market pricing in SPX. It's pretty fair. Okay, time and force good till the day. Down here, conditions. Down here, if you scroll down, little gray space, fill that in. Okay, SPX, it automatically fills. Make sure that it hits market price. This equal to below, equal to above, equal to below. Want to be equal to or below. Equal to or below. And then I'm going to condition this to 57.71. Okay, double enter. Okay, so buy one SPX, weekly's March 4th, 58.50 strike call, market when SPX market is at or below 57.71, which is a couple of points below the January low. Okay, so that's kind of what it looks like here. All right. And I would suggest to put the limit order in because things could happen pretty quickly, and that could swipe, right? Could swipe. All right, there's a couple other things that I looked at, pre-market that typically I don't, I did an ATR stretch and all that kind of stuff off the open. So, yeah. All right, we'll see. Tesla short. Yeah, it's one of the weaker ones. If we get down to the 250 handle, definitely target order into there. All right, negative COG is immenting here. All right, so if you are short and you got long puts, so on and so forth. All right, this is where we would be doing what here, taking profit, right? Now, I already have some puts on carryover from yesterday. So what I'm going to do is I'm going to take some profit off those long puts that I have carryover from yesterday. We kind of talked a little bit about that. So I'm going to be taking some profit on some long puts, which is short. As we're coming down into January's lows, monthly lows. All right, so I'm exiting some short trades because a long put is short. Okay, so I'm taking profit on, I'll say, bearish trades. Okay, just as a target area here. All right, I'm going to take a little more off right now. Make that bigger because I know I'm on a ghetto stream phone here, ghetto fabulous here. Peel out a little more puts here. All right. And in addition to that, what I'm doing, which is just a short kind of 7 points away, give or take. So taking profit on some put buys. So you buy a put, you bearish. Okay, great. And in addition to that, I got that order sitting there, 57.71. Okay, I kind of want that to, flush out. All right, and then I'd be on a kind of like a, mean reversion trade. All right, because, could we fill the gap potentially today? It looks like it doesn't want to right now, but, we've been having 100 swing point moves plus in the SPX as of late. Okay, so I'm loving this here. Now, if I was with my Phantoms group, we'd do a couple more things here too, because I'm not going to have enough time to kind of manage things with y'all, right? Just here on YouTube, on the tube here. But yeah, this is something that you definitely want to just keep pinned there. All right, I want to have this thing flush out a little bit there, maybe trap some more people in there. VIX up, sustained above its overnight high. All right, and we got a lot of the FANG stocks too, just kind of at an area too. So we'll see. Just get those limit orders in. If you don't understand options, you can take it in futures. All right, XLY, got a nice gap down. We got into that. That's going good. XLE, nice. We could take some profit on XLE, folks, right? If you're in that session. We got long puts for June. All right, you can TP some more XLE if you like. XLY is going for about $6 as well. All right. Hey, so not bad for the first session. For the first session that we had in Phantoms there for the weekly prep. All right, not bad. Could have done a lot better. First one. XLY. Spread's so wide on XLY, it's annoying. So careful hitting market on these, but you'll probably get a bid price about 580 if you hit market. All right. All right, so we did some sector rotation work yesterday. It's a lot of work, as some of y'all folks seen it, right? So it's not it's work. It's work. It's work. It's work. It's work. It's work. So we broke some things down for the folks. Yeah, it should be definitely, especially you were in there, The Godfather, Michael. That's The Godfather. Yeah, you should have got the email recording to it, all that kind of good stuff. We went through it, first time roundabout. So I got to figure out kind of how I want to outlay the work, and I'm still kind of, I spent a little time kind of explaining what I'm doing as well. So as we get the ball rolling and things like that, right? Talk to me in 2-3 months when we've been doing several of those stations. Will probably sessions will probably just be flowing pretty quickly, right? Right. So yeah, so it's the first session. I'm happy that the work that we've done right off the open today from yesterday evening, because we did it 1:30 till close 4 p.m. yesterday, and the work that we've done just off the back of yesterday, looking good. Even XLP, right? XLP is bullish. It's one of the stronger sectors in here. So even though this market's coming down, okay, we got a couple of sectors that are stronger. Okay, so we went through this whole thing here. It's for Phantoms members, of course. You got to go through you got to know options as well. All right. All right, you have to go through advanced futures. I'm sorry, advanced options, right? Because we're going to be talking about some advanced option strategies where we are, cash secured, credit spread, or close to naked spreads, all that kind of good stuff. All right, we got XLP. This is the one that we got long yesterday. It's the stronger sector here today. All right, so we got bullish XLP, and then we got bearish XLY and XLE, which is some of the weaker ones down in here. All right, that ding that you just heard is the SPX fill, okay? All right, I gotta run now to manage a couple things here. But just to show you that real quick. All right, those XLYs are going for about $6 right now, not bad. All right, what was the fill in SPX here? What are they going for? What did I get here? And VIX is up. All right, got them for about $5 was the fill that I got them for here. All right, the 5850s. All right, it's about 12 delta, give or take. All right, S&P futures also came down into a 5770 demand zone prime that I was looking at as well in S&P futures, but I got filled here on SPX regarding this. All right, if you're short Testy, looks like Norman's taking care of you there. TP, good job, Norman. TP some there into new low. All right, VIX spike new high. cumulatively is lower. That's not good for the liquidity sweep, but this is a sweep, so we'll see if we have it. Advanced declines negative 1500, vol D negative 4.7, so that's pretty extreme negative. All right, so we're going on a little bit of a mean reversion bounce trade here, so we'll see if we get it on the SPX. All right. Maybe create a prerequisite video. That's a good idea. Prerequisite when we have these videos. Yeah, because the idea is, you know, it's go, go, go. You know, we did almost 2 hours yesterday, give or take, more than 2 hours, right? And I couldn't even really get out everything that I wanted to. So it's work. Where's my notes here? On SPX. Oh, there it is. Where's my SPX? I don't know. TP Tesla if you're in. New low. All right, that VIX streaming to the upside. All right, SPY's just are swinging below its last month's low. All right, folks. So if you still want to learn a little bit more about this, all right, you can go to TradePhantoms.com. And you can click register there. And we have what, Thursday, March 6, 2025. This Thursday, 2 days, 2.5 days, give or take. First name, email there, click register. You know, there's about a 90-minute class, give or take, hosted by Mr. Black, Mr. Green. All right, here's the agenda, how markets work, right? Trading for income, you know, short-term trading, scalping, all the way to long-term investment, swing trading, so on and so forth. We talked about those sessions right there, right? All assets, stocks, futures, forex, options, small accounts, big accounts, everything, right? So that's a place where you'll learn, right? We just did a little, SPYs just did a quick little last month's low sweep. All right, so stay strong there, stick to the plan there. All right, SPX as well there. All right, still holding on to some SPY puts in the event that this SPX long liquidity sweep order here fails. Okay, Meta puts. I mean, just be careful with that. You know, Meta is one of the literally one of the strongest FANG stocks on the planet. Even though yes, it's off its highs. Okay, it's off its highs. But just look left, y'all. Look left. Okay, you got to be, you know, look left. There's some stuff down in here. So for a day trade, like in Tesla, right, with Norman, that you know, you can work on that. All right, but just note that you know, we are coming down into some indexes, and the bigger mega FANG stocks are coming down to some levels here. All right, I know there's some stuff happening here with the markets and you know, the tariff talk and all that kind of good stuff, right? But with VIX up, you know, we could still work the bearish side. All right, Meta might not be one that I would want to short because it's relatively more stronger than the others. Okay, I'd want to attack weakness, right? So kind of like what we're doing here, like where you sector rotation wise, right? Discretionaries, tech, and industrials and energy a bit more weaker, where you have staples and real estate and healthcare and utilities a bit more stronger. Okay, now the reason why I say that is because Meta is actually relatively more stronger than a lot of the other FANG stocks, Magnificent Seven. So be careful with that one there. Okay. All right. That said, folks, head up to TradePhantoms.com if you're new and you want to learn a little bit more about that. And then other than that, I'll see some of you phantoms later in the class. As always, God willing, right? So God bless. Take care. Trade safe and remain patient. Remain disciplined. And I'll see y'all soon. God bless. Blue out.